Hey, Mortgage Coach community, Dave Savage here. And we are at a time in the market where there's definitely challenges and there's also opportunities. And we're also in this position as mortgage professionals is that we can give fiscal stimulus to families. We can help them refinance faster. And we can make it as efficient and effective for that family as possible. So it is a great opportunity for us, but it's an even better opportunity for the families we serve. So I am putting together this video where I've taken clips from different conversations I've had with Josh Mettle, and we're calling this Josh Mettle March Madness because it is a crazy month of March, and ultimate digital refi experience, because that's what we need to do right now. We can't meet people face to face, so we need to deliver an amazing digital experience. So what you're gonna hear is you're gonna hear the kinds of questions that Josh is asking families right now so he can deliver amazing advice. You're gonna hear the language and the words that he's using. One of the words that I love is he's talking about mortgage strategies always trump rate, so that he can go from price into advice. And he can really serve that family, not only helping them refinance and lower their monthly payment today, but showing them strategies to pay off their mortgage faster, showing them strategies to turn this challenge into an opportunity for them in the short term and the long term. So check it out. You're gonna have the conversations he's having with families. You're gonna get an example of a total cost analysis. We're even gonna show you how he's delivering his point of sale app, how he's taking an app in today's market. Check it out.
So the clients that we have an opportunity to impact in 2020 will remember us by how we serve them and how we treat them. If they're a number and the only advice we give them is 3.49%, take it or leave it, sucker, I got another one waiting. And that's the feel, like they can just smell that we kind of think of them as money. That is how they will think of us when they turn to do their next purchase a few years down the road. So these are the three things that I am really trying to focus on when I talk to clients. It's not a conversation about rate. Of course, it always starts about rate because they say, hey, I think my rate's high. Can you get me a lower rate? And it's up to us to shift that perspective as an advisor and say, hey, this is an incredible opportunity, but the only opportunity is not just in lowering your rate. So let me ask you a couple questions. Let's talk more about strategy, because the right mortgage strategy trumps the best interest rate 10 out of 10 times. It always trumps the best interest rate. And I'll give you a couple examples. The first thing that we're doing with clients is we're asking them, yes, let me do a mortgage analysis for you. Send me your mortgage statement if it's not somebody that we did their loan and have all their data. And then answer these questions for me. What other debts do you have? Let's do a global debt analysis before we go head first into me prescribing you a mortgage strategy. Let me understand what's going on with your student loans. Let me know what's going on with your car loans. Let me know what's going on with those loans that you co-signed for your kids, and tell me what those payments are. So just real quickly, Chevy, $23,700 a month. Boom, let's get those listed out. And then let's start talking about the conversation of what can we do. We're at an incredible time in the mortgage world because not only are interest rates at an all-time low, but homeowner equity is at an all-time high. There's never been so much tappable equity in American homes ever in the history of the country. And at the same time, consumer debt is at an all-time high. People have an unbelievable amount of their monthly cash flow going to service that consumer debt. The better strategy is, instead of taking a 3.49 rate, take a 3.75 rate. Let's pay off the motorhome, the student loans, the credit cards. Let's save you $1,700 a month from all that crap you're paying, and then let's refocus that money towards your new mortgage. Your 23-year mortgage is now a 13-year mortgage because we went to a lower rate, we consolidated all that debt, and now we aimed that money that was going to the consumer debt towards your new mortgage. So that's conversation number one. We need to do a global debt analysis before we talk about any kind of interest rates on a new 30-year fix or what have you.
All right, guys, so you just heard Josh share how he's having conversations with families, and you heard the words, the best strategy always trumps the best rate. So one of the most important things you need to do is you need to talk about the 4 essentials to making smart mortgage decisions. And you've got a slide here that I'm going to pull up, and it's going to go through those 4 essentials. One of those is to make sure you're always talking to families about their cash reserves. Do you have enough money for emergencies and opportunities? Always analyze the cost of your debt over time. So show the cost over debt. always analyze all their consumer debt. So he just covered that. Now, if they don't have consumer debt, which he's going to cover in a minute, you are always looking for strategies to pay off your mortgage faster. So as you listen to this whole conversation with Josh, you're going to hear that he's following all 4 of these essentials with every single client, whether it's a purchase or a refi. That's how you have the conversation. Mortgage strategy always trumps rate, because you're not just talking about rate and closing costs. You're talking about these 4 fundamentals.
If clients don't have debt, then the conversation we're having with them is, look, if you understand an amortization table, then you know all the interest is in the first 10 years. I mean, the vast majority of that interest is loaded in the first 10 years. Well, guess how old the average mortgage in America is right now? 7 years old. So that means that the majority of people that we're looking at refinancing are just getting to the point where they're starting to pay principal. And if we drop them from 4.25 to 3.49 and save them a couple $100 a month, which they go blow because we didn't give them any advice, and then they go to sell their house in 3 or 4 years, guess what? We screwed them. Because they're actually going to pay more interest at 3.49 on month one of an amortization schedule than they are at 4.25 at year 8 on an amortization schedule. So we need to let them know that they're actually, if they're going to sell their home in a few years, they should maybe just stay in the same loan because they're just starting to get into the amortization table. Or we educate them of that fact and say, look, I'm going to refi you down to 3.49, but you better keep making that same payment. You better stay on track, because when you go to sell this house in the next 5 years, you're going to have a crap ton less equity if you start your amortization chart over and then make the minimum payment and go blow that money. So be super intentional what you do with that savings. And let me show you with the total cost analysis. If you refinance, let me chart your current mortgage trajectory. Let's see how much equity you have in 5 years. Let me chart a 3.49 rate with a lower monthly payment, but now you start the amortization table over. And then let me chart that 3.49 rate, but you keep making the same monthly payment, right? That is the game changer. And then the last thing is, of course, I'm trying to get people from, if you look what Quicken's doing, I don't know about you, but I get nailed by Quicken with marketing all the time. They're selling 15-year mortgage, 15-year mortgage, 15-year mortgage, 15-year mortgage. And that's the strategy we should really be helping people with. The ninja move isn't, hey, let me save you $200 a month. The ninja move is, let me help you get closer to retirement by 5 years by moving you to a 15-year loan, right? So it's the value and advice that we give clients now by slowing down, asking a few questions. We're great at asking questions on purchase applications, right? Tell me about your dog. Tell me about your kid. Tell me about your lifestyle. Tell me about this. On refinance questions, what question do we ask? What's your rate? Right? We need to get back into asking questions on what's going to happen to our clients, and we need to get into the advice mode, because in a few years, these refinance clients are buyer clients, and they're going to remember how we treat them in this transaction.
So Josh, my takeaways from hearing you talk was, don't just do a loan, provide a loan that's going to help the family achieve their long-term goals. I heard you say that every time you deliver a proposal for a refi, let's not just focus on the monthly payment, let's focus on the savings over time. And I guess I have 2 questions. One, how often when you do a refi TCA are you showing like, hey, here's your current loan, here's the cash flow savings, and here's a way to pay off your loan faster by prepaying your mortgage? How often are you using that functionality within the TCA?
Well, what I'm really doing is what Renee Rodriguez taught us in the Amplify event, Dave. I'm claiming the frame. Everybody's saying rate, rate, rate. I'm saying lower total cost and increase your wealth through a smarter mortgage strategy. And then I say these words: strategy always trumps rate. I don't care. You will always win as a consumer with a better mortgage strategy than a lower rate. And they're like, huh? And then I show them, to answer your question. And I'll say, here's your current mortgage, right? Here's what it looks like if we take you down to a 3.49 rate and you make the lower payment. Here's how it impacts your equity. You actually have less equity 10 years down the road because you start that amortization chart over. Here's what it looks like if you continue making the same monthly payment you are now, but we put you on that lower interest rate. And here's what it looks like if we go to 3.75, take a higher rate, but we pay off this $20,000 in debts that's tied to the $500 a month in payment. And then we use, not only do you keep making the payment you're making now, but you take that $500 you were making to the debt, we put that to the new mortgage. Bam, that's the ninja move. Now we pay off your loan that you had 23 years to pay off. Now we pay it off in 13 years. Doesn't cost you a dime more. Same number of dollars leaving your account every month.
Boom. So, and ask, would you mind taking an example TCA that you do for the mortgage coach community, call it the Josh Mettle Refi TCA, and then putting a video on it that is to the mortgage coach. So think of you as a sales manager for the mortgage coach community. You're like, hey, MC community, this is what I'm doing. And you give like a 3-minute sales leadership with a TCA so that everybody, you know, in the channel has a Josh Mettle Refi TCA with a video that has some scripting. Are you cool with that?
Yeah, man, I'm happy to do that. You bet.
Okay, and then one more ask, because I've seen this come in 20 different ways to Sunday, is people are, you know, hey, I've got the lowest rates on social media. They're mass texting their database. And I think all these things work. And there are some great ways to do a reach out. And the thing I like the best is I'm seeing top producers in off hours create missiles, you know, TCA with a video to a client, text, so they could do it in their off hours, TCA video with a text. What are you doing from a proactive standpoint, and what do you recommend? And then I'm gonna let Todd, you take it from here. I just want to hear what Josh is doing there.
Yeah, we're creating a series of. So I just wrote an article which I sent you a copy of, and it's a 3,000 word article, which is a pretty long article. Most people don't read articles that long. And I broke it into. We're going to break it up into 5 blogs. Each of those blogs will have a video around it, right, on that concept. And then we're boosting those videos. Those are going to be 60 to 90 second videos. We're boosting that to all of my past clients, all of our LO's past clients, and all their referral partners with the lead in to click, read the blog post, read the full article, contact us for your total cost analysis. So we're using, so we have a monthly email that goes out as well, but we're not peppering people with the email. Although our emails do allude to, you know, the opportunity that's around us right now for restructuring their debt, but we're really using Facebook and Instagram and Twitter to our custom audiences to get those messages out.
So I hope everybody heard, you know, the call to action is get a total cost analysis. Here's the deal, guys.
Sure.
As a financial leader, like we, and I've talked about it before, as mortgage professionals, we have the ability to be the captain of the wealth team, the most valuable financial advisor to a family. And common sense things like, you know, do you have 3 to 6 months in savings for both an emergency and an opportunity? Are you evaluating all your debt from a total cost perspective over time? Like the industry, everybody who sells money, they show you monthly payments and cash to close. You're an advisor. Look at the cost over time. Usually that means eliminate all consumer debt, like and maximize, you know, optimize 401ks and retirement, and then look for strategies to pay off your debt faster and build wealth. That's what Josh is doing, guys. So my last, you know, again, I'm going to leave it to you. I just want the mortgage coach community to make sure you heard everything Josh said. This is what a mortgage advisor does. And here's the deal. Not only if you do what he's saying, will you kill it in this market, you will elevate yourself for every market. This is like an opportunity for everyone to, like, if you were a B player in the mortgage industry, you can be an A player right now, and you could be an A player forever if you adopt these habits and these behaviors, because you pick your habits pick your career. And so pick these habits of doing more than quoting rates and selling monthly payments. Pick this as a time to build a new habit. And so Josh, one last thing, did you see that video that Jeremy Forcier did where he's asking his current client base for a referral? Like, you know, when they say thank you, did you see that?
But I'm sure it's brilliant.
Yeah, I'll let Michelle and Todd run with it. But here, bro, I will tell you, it's 2 minutes. Not only is it brilliant, but I'll bet you even you will get an extra 5 loans a month if you adopt this simple. When customers say thank you, active customers in the pipeline say thank you, you basically, you know, ask them for a referral. and in a strategic way. It's a real money strategy. So
The
Todd,
moment of influence when they say, thank you, you did a great job. I love it.
yeah, well, Jeremy has been through, Amplify, and he's amplified his ninja moves. The client says, thank you. And he basically says, actually, let me just pull it up real quick because I have it.
That's
And
actually
while you're on the phone.
that Jeremy could amplify his ninja moves, because he already had some pretty badass ninja moves. So these have got to be incredible ninja moves.
Well, listen to this.
Over the top.
So
Over the top.
listen to this. The customer says, thank you. In the subject line, it says, we love helping you, exclamation mark. First sentence is, can you help me with something? Remember, the customer just said thank you for a pre-approval, an approval. Can you help me with something? Space. My goal this year is to work with more people I like. Space. Can you introduce me to 2 people that you think I should know and I can help in the future? Boom. That's it.
Love it.
And he said not only is he getting leads, out of all his lead sources, they're the most convertible leads.
Wow.
Current customers in process. So, all right, I have done my part. I am going to let Todd take it over, and it looks like we got 10 more minutes with Josh. So have fun, you guys.
Thanks,
Dave, so thank you so much for jumping in. It's always great. Like, Dave's takeaways are just spot on, and he does such a good job of recapping what Josh just said, and then, of course, putting the mortgage coach icing on top of the cake. But I think that's really critical. And how much he talked about the ninja night moves of using video on a TCA. How much are you guys doing that, Josh?
Yeah. There's so much this really comes down to a capacity issue. So, honestly, I don't think our LOs are working until midnight. They are working early in the morning for sure. But a lot of my coaching around this season has been, business isn't going to be a problem. What we need to be thinking about is how this business and how this wave impacts us as a person. Like, if we go through this wave and you make a bunch of money and you're an ass to your spouse, or you're an ass to your operations team, or you just quit taking care of yourself, like, really, this is a great opportunity for us to say, there's so much business, there's so many people I can help. This is the moment I don't have to stress about that. And I can just turn my phone off for an hour and go engage and be one-on-one with my kid. I can take myself to the gym because I know that as soon as I plug a back in, there's going to be so much business here, so many people for me to help, that I'm good. So I'm probably not answering your question at all, but I feel a little bit like Donald Trump switching gears and going this way, or some politician. But what resonates me and what's on my mind is this. We do all this personal development stuff, and then we have a hard time like applying it. So at this time, as we're going through this, what I'm talking to my team about is, let's see if we can go through this process, which will probably be the greatest challenge we'll ever have as originators and teams, because I have 147 million people who want a 1% interest rate to refi. And at the same time, my realtors still expect me to close purchases in 17 days. That's an insanely challenging environment. Let's see if we can get through that and be nicer to each other than we were before. Let's see if we can get through that and not degrade our own personal integrity with our workout routines and taking care of ourselves. And let's actually see if we can get through this year and have deeper relationships. So that's like the challenge we have in front of us. And you can either make a little bit more money and be a jerk to everybody, or you can really apply some personal development thinking this year and be a wonderful person, help a tremendous amount of people, and don't be stressed out about it. So no, I'm not up at midnight sending whatever that was. I'm sleeping in, I'm sitting up and doing my meditation, and I'm going to the gym, and I'm taking care of myself, and I'm asking questions to clients. I'm not freaked out, stressed out. We're not moving a million miles. We're just slow and under control.
Well, I was only thinking not midnight, maybe like 8:30 you were up till.
Well, that is midnight for me.
A little past curfew, I know that. Well, but I love that you're framing it that way, because I do think that's the challenge. Everyone's like, oh my gosh, if I don't refinance my clients tonight at 10 o'clock, someone else is going to already have gotten to them. I think that's it, right?
I'm already hearing stories of banks, I won't name names, that are 120 days on refis. So chances are they're going to go somewhere else and have a horrible experience and not get a TCA. And if you did your job right the first time and gave them a good experience in a TCA, they're just going to come back to you and love you next time. So I can let those folks go, and I can still sleep well at night.
So let's talk a little bit of scripting for the LO on the call who's like, well, yeah, that's Josh. He can shift gears with his clients and talk strategy and how that's going to trump the best rate. But my clients are just hammering me for the best rate. Like, what are some scripts to arm them with in order to shift that gear back over to strategy with their clients?
Yeah, I'd just encourage everybody to watch the Mortgage Coach videos from Rene Rodriguez, and where he talks about claiming the frame. Just because somebody has a default understanding or perspective on something, you can claim the frame and you can change their perspective. So, it's just as simple as somebody saying, hey, I got 3.25% quote. Can you beat that? And I could just claim the frame by saying, hey, Todd, I've been in this business now for almost 20 years. I've helped over 3,500 clients. And here's the one thing that I've learned. Mortgage strategy always trumps mortgage rate. I can create more wealth and less total cost for you with a better strategy than somebody can with a lower rate. That's kind of funny, isn't it? But let me tell you a little bit more about that. And before I do, I need to ask you a couple of questions because I want to understand your global debt structure. And I want to make sure whatever strategy you decide to go with, whether it's 3.25 somewhere else or a strategy that I show you, I want to make sure that you do two things. You need to minimize your total cost, and you need to maximize your wealth in your real estate. And if you don't accomplish those things, you just save a couple $100, I'm telling you, you're losing. So with that being said, tell me about the debts that you have right now outside of your mortgage. What are the balances and what are the payments? And then let me ask you a few more questions about how many years you're going to be in the house, and then I'll tell you a better mortgage strategy. But just claiming the frame, right? I'm just moving them off of rate over to what are your goals? What are your debts? And then that all leads into building a TCA and showing them how my 3.7 rate's better than your 3.25. Because I just knocked out $1,700 worth of debt, and that 3.25 loan is going to take you 30 years to pay off. My 3.75 loan, you're going to be out of in 17 years. Make sense?
Dude, that's huge. I mean, that is just huge. And I think that that's something that we all in this community have to think about. You guys may have not done 3,500 loans over the last 20 years, but you're amazing at your job. You're really good at it. And what we tend to lack is the confidence, I think, Josh, to own the frame. And we tend to lack that confidence, and we tend to just get sucked right into that. Give me the rate, give me the rate, give me the rate.
Yeah, well, that's just my script, right? Because it's honest, it's true. I've advised 3,500 clients. I've done thousands of TCAs. That's my script. But if I'm Denise, the mortgage nerd, who's been on here, she's such a brilliant rock star. Maybe her script is hey, what I'm really aware of is that there's an opportunity to make a better financial decision. And what I'm passionate about as the mortgage nerd is making sure clients have the best strategy. And I'm afraid you're getting, a rate somewhere else with no strategy. And I want to make sure that we think all the way through the equation. Whatever your frame is, right? You Denise can frame it that way, but figure out what it is you're passionate about advising people and bring that up. But claim that frame that with you're going to get a better strategy, lower total cost, and greater wealth in their real estate. And that's 100% true if you are able to chart that out on a total cost analysis and show them the path.
So guys, you've listened to Josh Mettle for about a little over 20 minutes now. He shared the words he's using, the questions he's having, the conversations he's having. He mentioned the total cost analysis. So that's how he's showing the strategies. So what I'm going to show you right now is I'm going to show you an actual Josh Mettle total cost analysis with him using the video. There's a link to this down below, so if you just want to listen to the total cost analysis link, we'll put a link down below. And then after that, I'm going to jump back in and I'm going to walk you through how he's delivering the digital link. So we're getting the full digital mortgage from app to education. Check it out.
What's up, Mortgage Coach community? It's Josh Mettle, and this morning I am bringing you this commercial interruption sponsored by Dave Savage, the man, the myth, the legend. And he's asked me to share an example of a common TCA that we are doing for clients. So with no further ado, if I could direct your attention to the top left summary section, what you're going to see there, my friends, is your current mortgage along with 3 potential refinance strategies. And the first thing that I want you to be aware of is that the right mortgage strategy always trumps the lowest rate. Now that is counterintuitive.
but I'm going to show you what I mean by that. So in the second column there, of course, the first column is your current mortgage. The second column is a new 30-year fixed. Great. We have an opportunity to save $460 a month, which is a substantial save, and in and of itself seems like a good way to go. But it's not the best strategy. It's a good strategy. It's not the best strategy. The third column over is a new 30-year fix, so you get that beautiful low interest rate. But then instead of pocketing that $460, which tends to go to Starbucks and Netflix and whatever else you want to pick up along the way, we take that $460.72 savings and we re-put that towards the principal on the new mortgage. Hey, look, you're already comfortable making that payment at $2,978. Why not cut off 8 years on your mortgage? With your current mortgage trajectory, you got about 29 years left. With a new mortgage, we're down to about 22 years. So, we're saving about 7 years off your mortgage with the same exact payment that you're making right now. That's what's so important to realize. And then in the final column, I want to show you one last option. I noticed that you had a car loan with about $20,000 in balance and your payment was $650 a month. So what if we pulled out $13,000 in cash the day of closing? What if we close the first of the month, which means that you can skip that month's payment and the next month's payment? That'll save you about $6,000 in cash flow that you would have been making those two payments. Plus, you're going to get an escrow refund, which I think is going to be somewhere in the neighborhood of about $3,000 to $4,000. So you get about $10,000 from your escrow refund and the two skipped payments. Plus, you get the $13,000 cash back. That should give you enough to pay off your car loan of $650 a month, and then maybe take a shot at one of those credit card balances. And then, what if we redirected that cash flow that was good, that $650 that was going towards the car, and we now put it to pay down towards the new mortgage? What would happen? Well, as you scroll down the total cost analysis, you can see that your freedom point for your mortgage now goes down to 17 years. Same amount of dollars leaving your checkbook every single month, but you pay your loan off 12 years faster. Sorry, it's early and I've been up since 3:30, so you have to give me a break there. So you pay your loan off 12 years faster with the same amount of payments going out. Now listen, what I'd like you to do is scroll to the bottom of the total cost analysis. Now that we kind of have our eyes and our mind wrapped around these different options, let's look at the total interest paid on each of these loans over the life of the loan. And the very bottom, you'll see we've charted your current mortgage trajectory. How much more interest do we have to get that loan paid off? And then I've done the same thing for a new 30-year fixed. Then I did the same thing for the 30-year fixed, but you keep making the same payment. And then I did the same analysis based on you paying off the car loan and then being disciplined to refocus that cash flow towards paying off the new mortgage. And this is where I'll go back to my opening line. The right mortgage strategy always beats the lowest interest rate, because you'll notice that the loan with the lowest overall interest over the life of the loan is the last option. It's also the option with a higher interest rate. There's 4 more info tabs in the presentation. I'd encourage you to click into all of those, and then I'll be reaching out to schedule a follow-up call. I want to make sure I've answered all the questions. You've really dug deep into these numbers and we're on the same page. Honored to have the opportunity to earn your business again. Look forward to talking to you real soon.
At Mortgage Coach, we want to help you become a black belt at mortgage advice. So I don't know where you're at in your journey, whether you've done 20 total cost analysis, 0, you've done 100, or you've done over 1,000 and you are a grand master at Mortgage Coach. We want to help you get there. So you'll notice that Josh had a value prop, how he positioned himself with families. He talked about his advice. He talked about building wealth with real estate faster. He talked about mortgage strategies. Again, he used words like mortgage strategies always trump rate. He uses it all the time with every family. He asked questions like, how old do you want to be when your home's paid off? Client says, oh, I'd like to be 50, 55. Well, how old are you going to be based on this loan that you have or the loan that we're getting you? Well, I'm going to be older. So there's usually a gap between what they want and what they have. So you got to ask these questions and remember the 4 essentials. Make sure you're asking these 4 essentials. And then remember, number 2, Mortgage Coach makes this easy with the total cost analysis. Number 4, every time you do a refi with someone, show them what they could do if they invested that savings to prepay their mortgage or somewhere else. Do it every time. Now here's the deal. We can't meet with families. This is Jake Kroll in Seattle. probably not meeting as many families in person as he was before. He's delivering a digital experience. So this is what Josh is doing. He's meeting with a family over the phone, having a 5 to 10 minute conversation, whether it's a refi, whether it's a purchase, and then he's sending a text to download his mobile app, and he's sending them a 1 minute, minute and a half video giving them direction on how to efficiently do business with him in today's digital world. So check this out.
Hey Chad, Josh Mettle, Fairway Independent Mortgage. Good chatting with you, buddy. Enjoy the BYU game and go Cougs.
Personal
Hope you get a
connection,
victory.
show him he listened.
I will send you next my personal contact card. Please save that. If you need me, don't hesitate to text me. That's probably the quickest way to get a hold of me most of the time. But feel free if you need me after hours on the weekend, shoot me a text that way. I'll also then send you a text message with a link to the Fairway Now mobile app. This is a great little tool. Please click on the link, download the mobile app from the App Store, then launch the app and click on the client questionnaire. Once you've completed the client questionnaire, that data is securely transferred over to me. As I said, it's preliminary information. I'll backfill anything that you missed. Just fill it out to the best of your ability. Probably shouldn't take you more than 10 or 15 minutes from your mobile device, and then we'll jump in and get going from there. If you could also send me a copy of the purchase agreement, that would be great. My email is josh@joshmettle.com. It'll also be in the contact card I send you, and we'll be in contact soon. Take care, buddy.
So if it was a refi, it'd be about 15 seconds faster because you wouldn't be asking for a purchase agreement. But you guys get the hang of it. It's just a simple text that he's sending a client. You know, he's calling his app a digital questionnaire. He's cutting and pasting this in. And then everybody's getting a total cost analysis. So this is the TCA link. You'll notice it's graphs, it's charts, it's showing them mortgage strategies. It's got social survey integrated into it, so they have their reviews. Again, the ultimate mortgage experience. The ultimate mortgage experience is going to help you close more loans, get less price exceptions, and just help families at a higher level. You know, here at Mortgage Coach, we are absolutely dedicated to bringing you amazing technology, to bringing you this amazing community, and of course, providing you sales trainings with video like this. So hopefully you got tremendous value from this.
I'm always honored to be here with the community, and I'd be remiss if I didn't just say thanks to the community, because I get so many emails and messages, and a lot of folks know that we're licensed in all 50 states, so we get referrals from the Mortgage Coach community. And you know, between you and Dave and the whole community, it's just it's a really important part of my life and a group that I'm proud of. So thanks to the community, honored to be here.
All right, guys, so you have just learned from Josh Mettle the conversations he's having with clients during this refi market. Here's the deal, guys. This is not just a refi market. I mean, this is just an extreme challenge for so many families. I love how connected he is at just helping people, listening to their needs, listening to their questions, and then going above and beyond and giving them advice. So here's the deal. This is not only an opportunity for you to make a lot of money and help a lot of families. Guys, we're providing fiscal stimulus to families by doing refinances. So really helping people. But we need to do it by communicating effectively and efficiently and digitally. So if you do everything that Josh is doing, not only will you be serving the families that are your customers, not only will you be serving yourself, you're going to have skills that when the market changes, when we can get out and we can meet people in person, you're going to have new skills. You're going to be using video more effectively. Think about every single family that if you put a text video in the app, how good you're going to get at video. Think about it. If every family got a total cost analysis that's a lead and a video, think of how good you're going to get at that. So use this time where, you know, social distancing is keeping us in as an opportunity to fine-tune our video skills and to deliver the ultimate digital experience. I hope you got value from this. If you liked it, give us a like down below. Share it with your mortgage friends. And for you managers out there, you need to do your own version of this. Use this video as a tool, but meet with your loan officers. They all need to be doing what Josh is doing. It makes perfect sense. Hope you got value.